Donald Trump isn't just a former president, he's a businessman who's built his brand on high-stakes investments. So when he talks about policies that shape the housing market, investors pay attention. But here's the big question: do his real estate policies actually help the everyday investor? From tax breaks to deregulation, we're breaking down everything about Trump's real estate agenda. Donald Trump's first month back in office sent shockwaves through Washington. Politicians and media outlets scrambled to keep up with his unpredictable decision-making, but for those who had followed his career in the world of real estate, it was nothing new. Trump has always thrived on unpredictability and bold moves, and that's exactly what he did when it came to real estate. From massive tax cuts to gutting regulations and reworking housing gain finance, his policies completely changed the landscape for investors, developers, and home buyers. Some people struck gold, while others found themselves facing unexpected problems. One of Trump's biggest real estate charges came with the Tax Cuts and Jobs Act of 2017, a tax overhaul that turned the financial world on its head. For moguls in real estate and investors, it was like hitting the jackpot. First off, corporate taxes were reduced drastically, dropping from 35% to 21%. That meant real estate companies, especially large development firms, got to keep a whole lot more of their profits. If that wasn't enough, the Tax Cuts and Jobs Act threw in a juicy deal for small-scale investors too. Businesses set up as pass-through entities like LLCs and partnerships got a special bonus, a 20% deduction on their earnings. That meant more cash in the wallets of property investors and a strong incentive to dive deeper into the market. But the benefits didn't stop there. The tax bill also reworked something called bonus depreciation, which gave real estate investors even more reasons to celebrate. Before the TCJA, investors could only get big tax write-offs on newly constructed properties. But under Trump's changes, used properties were suddenly included in the mix. That meant that if an investor bought an older apartment building, they could immediately deduct a big part of its cost, making real estate deals way more appealing. This policy led to a lot of buying and selling as investors rushed to cash in on the tax benefits. Apart from the tax cuts, though, Trump also introduced some deregulation policies. If there's one thing that Trump made very clear during his presidency, it's that he wasn't a fan of government rules and regulations, especially when it came to real estate. He believed excessive regulations were choking the industry, slowing down construction and making it harder for investors to make a profit, so he went to work slashing regulations. Before Trump took office, developers often had to go through years of environmental reviews and bureaucratic hoops before they could even start building. His administration went to work on the approval process, cutting waiting times and making it less expensive to break ground on new projects. This was a game changer for builders who wanted to move fast, but not everyone was happy about that. Environmental groups and urban planners worried that fast-tracking projects could lead to haphazard developments, potential safety risks, and a lack of long-term planning. And Trump's deregulation push didn't stop at construction rules. He also made it easier for developers to get their hands on money. A key move was rolling back parts of the Dodd-Frank Act, a set of financial regulations introduced after the financial crisis of 2008. These changes loosened lending restrictions, making it easier for developers and investors to access capital. While this fueled a wave of new investment, critics feared it could lead to risky lending practices and potential instability in the market. Another major perk for investors: expanded bonus depreciation. Previously, this tax break only applied to brand new properties, but Trump's administration extended it to used properties as well. This meant investors could immediately write off a big part of their purchase costs, making real estate a hotter investment than ever. As a result, developers and landlords jumped at the opportunity, snapping up properties and reaping the financial benefits. Trump's team also entertained the possibility of privatizing Fannie Mae and Freddie Mac, the two government-backed entities that play a massive role in mortgage lending. Led by William Poulter, the Federal Housing Finance Agency, discussions about shifting them into private hands gained traction, signaling a potential shakeup in the mortgage industry. Supporters argued that privatization could reduce taxpayer risk, while critics worried it might make home loans more expensive and harder to get. Now, sure, all this was a boon for business, but at what cost? Trump's deregulation spree was a goldmine for developers and investors, making it easier and faster to build, borrow, and profit. But with fewer rules in place, concerns about market stability, environmental impact, and financial risks loomed large. And Trump's tough stance on trade and immigration didn't just make headlines, it sent shockwaves through the real estate industry, shaking up everything from construction costs to housing affordability. Stricter enforcement led to a shrinking construction workforce, making it harder for builders to find skilled labor. With fewer workers available, wages shot up, and so did the cost of construction. For developers, this meant higher expenses, longer project timelines, and tighter profit margins. For home buyers, higher home prices became the new norm. Trump's tariffs on essential building materials like lumber and steel added another layer of financial difficulty. Suddenly, everything from framing a house to installing high-rise beams became a lot more expensive. As costs trickled down to buyers, affordability concerns became larger, making home ownership more challenging, especially for first-time buyers. While all these policies fit into Trump's broader America First strategy for developers and home buyers, they also came with some serious financial hurdles. It wasn't just about navigating new tax rules or adapting to deregulation. Outside economic forces made real estate an increasingly expensive game to play, no matter which side of the deal you were on. One of the biggest headaches: interest rates were increasing way higher than they had in years, and that put a major pinch on real estate financing. Deals that once looked like surefire wins suddenly weren't adding up. Investors and developers who relied on loans to fund their projects found themselves forking out way more in interest, shrinking their profit margins, and in some cases, making deals outright unworkable. Some took the hit and adjusted their strategies, while others simply walked away, waiting for a better financial climate before making their next move. And as if expensive borrowing wasn't enough, insurance costs were soaring too, and Mother Nature was largely to blame. More frequent and more intense catastrophic weather events had insurance companies reassessing their risks, and when they did, they hiked up premiums, leaving property owners and developers to pick up the tab. Those trying to build in storm-prone areas faced even bigger challenges. With insurance costs ballooning, some projects had to be restructured just to make financial sense, while others got scrapped entirely because the numbers no longer worked. Between rising interest rates and skyrocketing insurance expenses, real estate investments became a high-stakes balancing act, where careful planning and deep pockets were more important than ever. But Trump's tax policies weren't all bad. One of the biggest perks: investors got to keep their sweet deal on long-term capital gains and qualifying dividends. That meant they still paid lower taxes on their earnings, making real estate an attractive option for those looking to build their wealth over time. But while the tax code worked in their favor, it wasn't good for everyone. Individual tax rates dipped temporarily. The top bracket slid from 39.6% to 37%, and the standard deduction got a boost. Sounds great, right? Well, not everyone thinks that. The trade-off was that personal exemptions disappeared, leaving some taxpayers feeling like they'd been handed a mixed bag instead of a financial break. And here's the catch: many of these tax cuts came with an expiration date. Unless Congress decides to extend them, they're set to disappear in 2025. If that happens, tax rates could shoot back up, forcing investors and homeowners to rethink their financial strategies. It's like a ticking clock, and everyone in the industry is keeping a close eye on whether lawmakers will extend the tax cuts or let the time run out. Beyond taxes, though, Trump's push for deregulation had investors and developers feeling optimistic, at least at first. With fewer lending restrictions and looser financial rules, it became easier to access credit, finance deals, and keep transactions moving. Real estate corporations in particular saw major benefits from the lower tax rates and deregulated financial environment. But there was another side. Reduced oversight meant higher financial risks, and middle-class investors, especially those just getting into the market, had to navigate a more unpredictable landscape. And while deregulation encouraged investment, it didn't necessarily make home ownership easier. In some cases, looser lending practices led to affordability challenges, making it harder for first-time buyers to get a foot in the door. At the end of the day, Trump's policies created clear winners and losers in the real estate market. Investors and developers cashed in on tax breaks, depreciation benefits, and easier access to credit, but home buyers, not so much. Rising construction costs, labor shortages, and expensive materials pushed housing prices up, while increasing interest rates and soaring insurance premiums made owning a home even less affordable. And with the market swinging unpredictably, long-term planning became harder than ever. And the biggest wild card is the uncertainty. Trump's rapid-fire decision-making style kept the industry on edge, and his tax cuts, while great for investors, aren't set in stone. In 2025, those who benefited from lower taxes might have to brace for hikes, and market volatility, well, that's not going anywhere. Trump's real estate policies have reshaped the industry, creating opportunities for some and hurdles for others. But as the market continues to grow and evolve, the real question remains: was this a bold investment in economic growth or a high-stakes gamble that could backfire?